Hi, I'm Jim Juback, and welcome to my YouTube video for Wednesday, November 30th. I don't know what you guys use as markers for the change to the Christmas season. Stands for selling Christmas trees go up before Thanksgiving. For me, however, one of the big markers is Christmas carols. I sing Christmas carols to myself all year long, so that's not a good indicator. But there's one in particular, Walt Kelly's version of Deck the Halls, known as Deck the Halls with Boston Charlie, Nora's Freezing on the Trolley. And I only really start to sing that when Christmas is coming and it's starting to work its way into my repertoire. And maybe even I will sing it for you next week, if you're lucky, or unfortunate, whichever you prefer. Okay, so if you like this video, please give us a thumbs up. Subscribe to my YouTube channel. That way you get notification of when the next one goes up. We're doing about 3 a week, but not always on the same day. If you want more of my stuff, 3 portfolios, free site is jubackpicks.com. It's got dividend portfolio, long-term, 12 to 18 month. Or you can get more posts, more portfolios, 6 instead of 3 with some options and ETFs. And that's on my paid site, jubackam.com. Okay, last week I said the Fed's message was confusing because the Fed seemed to be confused. Well, this week the Fed is on message. So the title of today's piece is Suddenly the Fed is on message, ask why. And it's really extraordinary. So on Monday, we're back from Thanksgiving and the markets are open and suddenly everybody at the Fed is talking. James Bullard, St. Louis Fed, who's a pretty aggressive inflation fighter, saying, hey, the market is overestimating the odds of, or underestimating the odds of aggressive Fed Reserve rate hikes in 2023. And he's saying, well, I'm thinking that we're going to need to take the Fed rate up to 5 to 7% range. Fed rate is currently 3.75 to 4. And then we have Loretta Mester, who is the Fed president of the Cleveland Fed, saying, hey, the Fed isn't near a pivot. And then John Williams, head of the New York Fed, giving the most detail, I think, saying more work has to be done on inflation. There may be a path to cuts in 2024, but that takes 2023 off the table. And he was talking about having to take unemployment up to 4.5% to 5% by the end of 2023. He didn't say the R word, but you don't get 4.5% unemployment or 5% unemployment from our current 3.5% or so without a recession. And then the other thing that I found interesting was Lael Brainerd saying that, hey, supply chain disruption keeps on going. It makes fighting inflation really, really hard. So that put her in the we're not pivoting anytime soon camp. Okay, so why all of this? 2 things. One is the Fed is indeed, as it says, being data-driven. And the thing that remember about is that the Fed gets its data before we do. So this week we're going to get an inflation number, the Personal Consumption Expenditures Index, which is the Fed's preferred measure of inflation. We're going to get that. The Fed's already got it. We're going to get the November jobs number on Friday. The Fed's already got that. So you can say, well, the Fed is now has those more data points, so this is a reflection of what it sees in the economy. There's also the fact that we're about to go into the quiet period. There's a period of, about 10 days before any Fed meeting where the Fed doesn't comment. And that the quiet period for this Fed meeting is on the 14th, starts on December 3rd. That's this week. So maybe the Fed's getting its last licks in before it stops talking at all. All those things I think are playing in here. I think the market is trying to figure out what to do. I think we're going to see some backing and filling before the December 14th meeting, especially because we've got that November jobs number coming out. I think, however, that the market really wants to go up here. It's not for any sound reason except that it's the end of the year and we like to portfolio address. So after the December 14th meeting, the market may be able to construct a story that lets it go up through the end of the year. That's what I'll be watching for. But certainly, looking at 2023, the Fed didn't give the market any reason to go up. in terms of interest rates. Thanks very much for watching. If you like this video, please like it, give us a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we do the next one. We're doing about 3 a week. If you want more of my stuff, including 3 portfolios, go to my free site, gbacpicks.com. Or if you want 6 portfolios, in other words, more, go to my paid site, that's gbacam.com. You can find links to all those down below. Thanks for watching.